HEDGE 4 Trading Platform Presentation, Part 1. If you're interested in profitable online trading, this is the right place for you. No matter what you like to trade, futures, options, CFDs, or Forex, I will show you a revolutionary and profitable way to do it. The problem with trading always is, unless you have a crystal ball that can foretell how markets will move in the future, you don't have the slightest chance to constantly make profits and keep them over a longer period of time if you use regular trading strategies. No fundamental or technical analysis or any indicator can ever tell you for sure where the price of a stock, CFD, future or currency, Forex, will be in a month, a week, or even in 5 or 10 minutes from now. And please, prove me wrong if you can. Yes, you could be one of the few lucky ones that once bought something at a low price and you were lucky enough to sell it at its peak. But can you do this every single day? Well, if you could, you should be a billionaire by now. But if you're not that lucky or ingenious, I would like to introduce to you a technology and a strategy that would constantly produce profits with no luck involved every day for as long as you trade. I call it hedged trading. Hedge trading is totally different from any other trading strategy or system. It has no market risk and it still makes good profits every day for as long as you keep doing it. Again, I said it makes good profits every day. I did not say it will double your account every 2 weeks, because if that's what you want, you will need to take risk that can wipe out your account in a day. And this is not what hedge trading is about. Here's the strategy. When you do hedge trading, you always have a long and a short position of whatever instrument you trade. For example, a CFD or a Forex currency pair. That's why it's called hedged. This means that no matter where the market price goes, one position makes a profit and the other will lose. This way you completely eliminate all market risk. You might say now, wait, if I make money on one side and I lose on the other side, what sense does it make? And where's the profit? Well, that's a great question. And the answer is rather simple. You make a little bit more money or profit than you lose. Let me repeat this. You make a little bit more money than you lose. And by doing this over and over again, little money becomes big money. This also means no crisis or boom or any market news can ever affect your trading results. It also means that no fundamental or technical analysis or any indicator will ever be necessary to determine your trades. You never have to buy or sell a position and then hope it'll go your way. You always know your prices before you trade. Can you tell me another system that does that for you? Probably not. Trading currencies, called Forex or FX, is one of the best instruments for hedged trading because it has low transaction costs, such as spreads and commissions. It is very liquid and you can do it virtually around the clock. But it also works with other instruments, such as CFDs, futures, etc. Let me give you an example. The euro-dollar. The general belief is that there is only one price in the world for the euro dollar at the same time. And that is simply not true. The price for the euro dollar throughout the different banking networks worldwide is similar, but in fact it's never the same. Different institutions worldwide make transactions simultaneously in Europe, USA, Asia, Middle East, Australia, etc. So within those regions, they influence the short-term supply and demand, thus resulting in short-term local fluctuations and volatility of price. Hedge 4 takes advantage of these local fluctuations. It means that it does happen that in one place the euro dollar is less or more expensive than in other places. When you trade hedged, you buy at the lowest price that is available and you sell or you hedge simultaneously at the highest price available worldwide. The difference in buy price and hedge sell price is your profit, and it can be substantial. Here's a simplified example. Let's say the euro dollar is at 140.05 in London and at 140.00 in Frankfurt. Hedge 4 sees that and automatically buys at 140 in Frankfurt and hedges the position by selling at 140.05 in London at the same time. Now we wait until prices go back to the same level, and then you can close the two positions at the same time, let's say 10 minutes later at 140.09 in London and 140.08 in Frankfurt. And you just made 9 pips on the long position and you lost 5 pips on the short position. This means you made 4 pips of profit, which is about 0.28% in one single trade with no risk. Let me repeat it, with no risk. So, even if the position would have gone the other way, so let's say down to 144.85, you still make the same profit regardless of the direction of the trade. 4 pips might not be a lot, but it's still profit, and it is risk-free. And you could do this 100 times a day. Imagine 0.28% times 100 would be 28%. Well, I'm not saying it's going to happen every day, but it's possible. And that is the real power of this system. Having a long and a short position to hedge the other means there is no market risk involved. The price could go anywhere and you just don't care. You might wonder if the price really fluctuates that much between markets and suppliers, and I tell you, you bet. If you don't believe me, just go online and watch our live video or even sign up for a live demo. Then you can see it for yourself. Here's an actual screenshot of the trading platform. You will notice that all trades come in pairs. One is a buy and one is a sell. And you can see on the right side that the profit in green is always a little larger than the loss in red. I strongly encourage you to watch the live trading video after this presentation. So, you're buying cheap and selling more expensive, and all this at the same time. That's it. It's that simple. This is the end of part 1. In part 2, we're dealing with a few questions that might be interesting to you. Thank you very much. See you in part 2.